So we're shooting a video here. It's kind of just like day in the life, just because I get pulled in so many directions, kind of like showcase what it is. So we have one of our LOs came in, can't figure out how to get the system to work. We have the file and structure correct, but can't figure out where to put some of these numbers. Because we're brokers, we use so many different lenders, each have different portals. And it's funny, you'd think that they'd all be the same, but they're not. They're all different layouts, so things aren't always in the same spot. You go from having to do high-level items like negotiate leases, negotiate contracts with clients, price things out. As the owner, you still have to help out with the day-to-day. That doesn't change. So, for example, in this one, the seller's giving a credit to the buyer towards closing cost. AM, how much you say those were?
2.5% of the purchase price.
Okay, it's 2.5%. The loan is $442. So this seller is getting $11,550 in seller concessions. Okay, that's seller concessions, everybody, are credits to the buyer to go towards closing costs. They directly come from the seller's proceeds. Okay, so if a guy is buying a house for, in this situation, $442, the seller's giving 2.5% concessions, or the equivalent of $11,000. The purchase price stays $442, but the seller nets the difference after the credit. It allows for the buyer to essentially finance their closing costs. Okay, what else was missing? We got the seller concession fixed. What else was not correct?
The cash to close.
Cash to close. What was wrong with it?
I don't think it was accounted for the seller.
Okay, because it wasn't in there.
Yeah.
Got it. Let's take a look here. And this seller's getting a phenomenal interest rate of 5.5% on a 30-year fixed loan. So that's fantastic to see. It's good to see, pricing is changing. There's a cost for that loan. There's cost for the rate. What was the fee that we had to charge the client for that rate?
It was going to be, I believe, 1% of the loan amount.
1%, okay. So we're charging them $4,200?
Correct.
Okay. So we got pricing situated, 5.5% on a 30-year fixed. Client is qualified by a landslide. Take a look here, rates, pricing looks good. This is a transaction in Illinois. So in Illinois, they pay taxes in arrears. Okay, so I think I told you this earlier. They pay taxes for last year today. So we're in 2026. The taxes that are being paid by Illinois residents this year is for 2025. So at closing, what happens with the majority of purchase transactions, the seller is going to be reimbursing the buyer for those taxes because the tax bill hasn't come yet, but the owner's not going to own the property at that time, so they have to reimburse it. So the system estimates that they're going to get a reimbursement of about $6,700.
Okay. That's separate from the earnest money deposit?
That's separate from the deposit, completely separate. Okay. So a lot of times when clients don't escrow on Illinois transactions, they never have any closing costs. It's because by the time that they get the seller the credit from the rate and, in this situation, seller concessions, so I shouldn't say never have closing costs, but they have seller concessions and the credit from the rate, she's not gonna have any costs out of pocket. She's just coming out of pocket down payment, which also helps too because if you have all this extra credit, she can get an even lower rate if she wanted. Okay. Because she has the credit. Approved, good to go. Does this client want to lock her rate or float it?
I think we'll float it for now.
Okay.
We'll lock it in next week or so.
Yeah, confirm it, and we'll get that out. Her disclosures will go out not locked, and then we'll just, if she wants to lock it, we can always lock it right after. It's no big deal. Take a look at these disclosures. This lender's portal is actually really easy. Like everything's a checkbox, super simple way to follow the flow. And when they're clean files, these guys just coast. Where did you get this client?
This was someone I spoke to on the dialer last week and stayed in touch because they didn't have an offer in place yet. And just yesterday they got an offer accepted, so I said, let's get the process started.
Beautiful. Take a look. So see if this fits everything. So loan amount, rate, payment, not including taxes, insurance, obviously. Closing costs here. Cash to close is $16,458. And what's the down payment she's doing? 5%?
5%.
Okay, so 442 times 0.05. So that's 22,000. But because you have so much in credit, seller concessions, which covers all of this, all of your costs and your additional items, you don't have to do it. And yet she had a $12,000 deposit. She's only coming out of pocket $16,000 at closing.
Wow.
Yeah.
See that.
It's actually sick.
It is actually sick.
You know what
I
I mean?
didn't know they give you, and on top of the seller credits and the deposit, they give you that adjustment for
Yeah.
the taxes.
Yeah, so the taxes are going to overstate. This $2,700 I'm going to assume is going to fall off.
Yeah.
I can almost guarantee it's going to fall off.
Yeah.
But until you know 100%, you might as well leave it in there.
Yeah.
But other than that, I mean, this is a good
Everything else
loan.
is pretty much kind of set in stone besides this fee. It might,
Yeah,
might fall off. And
correct.
then you're going to get a reimbursement on, or is that already accounted for?
No, the reimbursement's right here. So you see right here, 6,700 roughly.
Well,
so
that would be at like 23 or some change.
Yep.
Okay.
Yep.
Makes sense.
Yep. So that's already factored in there.
Perfect.
Cool.
So these
Good
are ready
to,
be disclosed?
yeah, I can press the button, ready to go.
Let me just call her first.
Okay, call her, make sure you're on the same page.
Yeah.
And we'll get it done.
All right, sounds like a plan.
All right,
Thank
baby.
you.
No problem. There, just like that. Phone rang 3 times in that 2 minutes. I think I get 50 emails a minute, or 50 emails at least every 30 minutes to an hour. JP, for one of our lead sources, they're asking us if we want to receive leads on the weekends. These automatically go into a campaign. Do you think it's a good idea? Well, who's going to answer? What if it comes in on a Sunday? What if it comes in on a Sunday? No, these are like clients who are submitting applications. So should I just do through Saturday? Yeah. I got him here. Just in case you guys forgot about Bruno here.
Bruno, the office dog. Say hi, buddy.
Another phone call. Hey, Joe. I'm good, doing well. How are you? Okay. Okay, cool. All right, brother. Thanks, Joe. Talk. Bye. This phone ended. Another one called. This is one of those days. So yeah, days never end. And it's 2:40. I have at least 3 hours to go of work with a minimum, without being interrupted 48 times, to talk about basketball, to talk about an issue with a file, talk about anything. Being the owner of the mortgage company, being just a leader in general, pulls you in a ton of different directions. You know, I have phone calls I have to get back to, so we're gonna end this video, but just when you're a leader, you have to wear many hats, especially in the beginning. You know, as you're developing and having people take on responsibilities, it's important that you show them how it's done, you show people what it's gonna take to get there, so then you can start to offload some of that additional work. So then I won't have to take some of the useless questions once the guys are more established. Or I may not have to take a handful of these phone calls because we've trained these people up to kind of handle things themselves and just be more independent. If you're looking for anything, you know, I hope I can help. I got a bunch of great content. Take a look at this video right here. Tell me how you like it. You know, kind of give you a little explanation on other parts of the mortgage process. Talk to you guys soon.
Here's why 2 people with the same credit score can get 2 different interest rates. So let's say Bob and George both are applying for a mortgage on the same day. They both have